Hello, everybody, and welcome back to another Reno-Sparks real estate market update, this time for May 2023. We've seen interest rates rise significantly over the last year, which has put pressure on prices. But are we seeing prices rebound with the spring selling season upon us? What about homes for sale? Are we seeing more or less? Well, we're going to answer those questions and a whole lot more, so stay tuned.
Assist you sell way smarter.
Now, before we get into anything else, I do want to mention that this is for the Reno-Sparks metro area only. Does not include Carson, Minden, Gardnerville, Dayton, Fernley, Fallon. Just the Reno-Sparks metro area, and it's for single-family residential homes only. Now, this is intended to be a 30,000-foot view of the market. Now, if you're interested in selling or buying a home in the near future and want more specific information, you can visit our website for renohomes.com. You can click on the Find Out Now button right here, enter your address, and we will send you a valuation right away and include a more detailed valuation so you know what to expect when selling or buying a home. So let's talk about mortgage rates to start with, as we always do. And I want to point out a few things. Number one, mortgage rates as we sit here late April, early May, right around 6.5%. I want to point out this gray area here, which is indicative of a recession. And so recessions are in gray. And this was actually back in 2008. And you can see interest rates right around 6.5%. And if we go back to 2006, 2004, 2002, you can see interest rates were right around between 6 and 7%. Well, after the recession, the Fed jumped in and started buying mortgage-backed securities and bonds, all in an effort to push interest rates lower. And as you can see, it worked. We saw interest rates drop to a low of under 3% in 2022 until we saw interest rates rise back up. Now, with interest rates higher, it may be a bit of sticker shock in terms of monthly payments. However, what we're seeing is a rebound to more normal conditions. Now, let's talk about median home price, which tends to get the most headlines. Right now, we're sitting at $539,975. Now, as a reminder, these are numbers through the end of April because as I record this, it's early May, so we only have numbers through the end of April. And when you look at these charts, when it says prior period, that means the previous month. In this case, that would be March of 2023. And of course, same period prior year would be April of 2022. So I put a few notes in here. We peaked out at 615 about a year ago, and we dropped down to a low of about 515, so about $100,000 drop. So we have seen prices come back a bit, again at $539,975. Now, what impact does that have on active listings? Now, active inventory are homes that are currently for sale and on the market. These are homes you could go look at today and potentially purchase. We're sitting at 642, which is down 3.5% from last month. Also down 8% from last year. Now let's look at active by price range. Now this actually, if you look down at the bottom of the chart here, you can see we have price breakdowns from 100 to 2, 2 to 3, 300 to 400, and so on. So as you can see, the majority of listings start at about 4 to 500, peak out in the 750 to 1 million, and then drop a bit in the million to $1.5 million plus. Now let's look at new listings. Now you're probably asking yourself, what's the difference between new and active listings? New listings are just the number of listings that came on the market in April. And these are not, some of these may have already sold through and aren't necessarily considered active. So right now we're sitting at 504 new listings for April, which is actually up 9.1% from March, where we had 462, but down 38.8% from last year around this time. And this is when interest rates popped up, was in April of 2022. And that's when we saw the market start to stall a bit. And we had 824 listings on the market last year. Now let's look at new listings by price range. And as you can see, the majority of new listings, again, are taking place between 4 and 5, 5 to 6, 6 to 7, before we start to see a drop off a bit at $1 million plus. Now let's look at closed sales. These are the actual sold properties for the month of April. We were at 410, down 7.7%, where we had 444 in March, down 26.4% from April of 2022. Now, these little marks I put on here just show you different April numbers. Normally, we would see a peak in May, June in closed sales. we saw a bit of a peak here and a pullback. I'd like to see this number much higher, and you can see the number is usually higher in the month of April. Now let's look at closed sales by price range, and this is where the story starts to get a bit interesting. As you can see, very few sales at $1.5 million plus. Again, $1 million to $1.5 million, few sales. 750 to 900, it picks up a little bit, but the majority of sales are taking place between 400,000 and 500,000, 500 and 600, and 600 and $750,000. Now this leads us to months inventory. So months inventory is how long it would take to sell the current number of homes on the market if no new homes came on the market. So for example, let's say 500 homes sell a month and there's 1,000 total homes on the market. That would be 2 months of inventory. So if we didn't list another home, 500, the inventory would be sold. Right now we're sitting at 1.6 months. Now, the way this works is if you have less than 3 or 4 months inventory, you tend to be in a seller's market, which means there's very few sellers and a whole lot of buyers out there that want to buy homes. So the inventory drops, prices tend to rise. Now, the opposite is true. If you go up to 4, 5, 6, 7 months and above, you start to see more of a buyer's market, which means there's very few buyers and a whole lot of sellers out there, homeowners trying to sell their property. So we're clearly sitting in that 1.6 range, which is a seller's market. So we're actually up slightly from last month where we had 1.5 months of inventory, but we're up 25% from the same time last year. But here's where the story once again gets interesting, and that is month supply by price range. So right now, if you look at 1.5 million plus, there is almost 5 months of inventory. 1 to 1.5 million, you're looking at almost 4 months inventory, and 750 to $1 million, you're at just at 3 months inventory. But if you go down here to the 2 to 3, 3 to 4, 4 to 5, even 5 to 6, you're right around either less than 1 or just over 1 month's inventory. So it really is the tale of two markets. The higher end market, we have a lot more inventory. You're starting to see prices fall a bit, but the lower end, you have a lot less inventory, and it's driving prices back up a bit, which is what you'd expect to see when you have very few homes. A lot of people wanting to buy them, it tends to push prices a whole lot higher. So there you have it. As always, if you have any questions, if you're thinking of selling a home, you should consider calling Assist to Sell. Get in touch with us. We'll sell your home for only $49.95. If your home is over $500,000, it's only 1%. Significant savings over what you might expect to pay from an old-fashioned full-price realtor. We do absolutely everything you need an expert local real estate agent to do. Show your house, advertise it, do all the paperwork, everything, all until you get your closing check. And the good news is that closing check when you sell your house is usually much larger because we charge you much less. It's been a pleasure. And again, if we can help you in any way, don't hesitate to reach out. We'll see you next time here on the Reno-Sparks Real Estate Market Update. Bye-bye.
Assist to sell way smarter.